We're live streaming. Hi, everybody, and welcome to the Sunday Market Update. It is great to have your company today as we get in with the team and starting to have a look at the market and what lies ahead of us in the week coming. Been a fascinating week for mine, and it seems to be technology day today, where things in the technology aren't perfect. The Fusion market account on my presenting laptop won't update because Fusion's server's down today. So I'm going to look over here and talk a little bit about the week to date, and I think it's been a fascinating week today. So US dollar index stays in the range, and it's the range has been in and out of for a long time now. Anything below 94.50, not really interesting. Anything above about $91, not really interesting. A break of that range will be interesting, but right now the US dollar sits in that for us. We've got Bitcoin stuck inside the range of Tuesday's bar. God, I got a bit of background noise going on here. Is that you, Julian? It's just a bit of breathing stuff coming through. You okay? Breathing's good.
If it is me breathing, Paul, I may be breathing. That's probably a good sign. And I will now go to mute while you do your thing.
Cheers, man. We'll be back here in a couple of minutes. Look, Bitcoin sits within Tuesday's bar, and we all wait for this well discussed rally that's supposed to come in November. Certainly looks on track for it as it moves up, and certainly I remain bullish on it, so as everybody else right now. Nasdaq just goes straight up. S&P goes straight up. Oil really interests me, and Julian may pick this up. Ainslie may pick this up more. But the real news, look, here's my advice to you, right? Oil is now a professional traders only market. With what's going on in Cushing, Oklahoma, and WTI, where it gets quite complicated. So in the US, there's a build of oil reserves, but in Cushing, that reserves is falling. But more importantly, the type of oil that sits behind the WTI contract is falling quickly. So all of a sudden, there's not really enough reserve at Cushing to stand behind the WTI futures contract. And that's starting to see the front-end contracts, that's the most recent futures contract, differentiate from the longer-term contracts quite a lot. And it just means for me, I've just explained that as a layman, and I am a layman in this kind of stuff, but I do think that maybe oil is one of those markets right now that we could see big volatility over the next 3 or 4 weeks. I do think that if you're a professional, you should be in there making a lot of money. And if you're an amateur, you should have your risk well controlled or be out of that market. It does concern me. Got to say, I've been long-term oil bull from about $7. So I'm kind of okay where I am. I probably said to myself, but I've been there for a while, So do encourage you guys to be pretty cautious around it. But for mine, the really interesting chart of the week is gold. All of a sudden, we've got gold breaking out. And all this talk, right? So has crypto replaced gold as the universal hedge? Interesting, because as crypto is set to rally, gold does rally, puts in a new high. We're looking forward to getting Ainslie's view on this, and that's what we're going to have for the next hour. So we're going to have the team come in. We're going to have Julian do macro markets. We're going to have Ash do data. We're going to have Alexis do fundamentals. We're going to have Ainslie do gold and oil. We're going to have Big O come in and do the US dollar. We're going to have Gordon come in and do US stock markets. We're going to have Lloyd come in and do currency strength index. We're going to look at this market from every view we possibly can and see if we can provide you with some information to put you on the right side of more trades than we're not, then we're on the wrong side of this week coming. Julian, interesting time in the market for mine. I remain overall a bit of a bull, but some stuff's not quite as clear as I'd like. Mate, I need to unmute you.
Julian, unmute. Here we go. Yeah. Here we go. Sorry, rookie mistake. Oh my God, how many times have I been on mute this week, guys? And for those of you doing Zoom meetings, the bane of our lives. I think we have introduced a whole series of new words into the English language. One of them is you're on mute because it's all one word. Okay, so guys, what are we looking at? For those of you that have just missed my market update, please go and catch it later about the macro overview. I think really for what I'm seeing, I'm just going to put this slide up just to give you a quick sense of what's happening. Where I see the real challenges right now, you've got a slowdown in the real economy. You've got a slowdown in Japan. You've got a slowdown in China. You've got a slowdown in orders in Europe, and equally within America, you're just beginning to see that over-enthusiastic North American vibe that they love to have during summertime just start to ease off a little bit. This isn't about just supply chain constraints. Remember, imports into America, the actual number of containers is up 50% year on year. It doesn't get any better than this. That's an insane growth that they have never seen over the course of the last 10 to 15 years, right? Insane amount of growth. So not surprisingly, the system is creaking a little bit, okay? So when we see that coming through as inflation, is it transitory or is it permanent? I am hanging on by my fingernails to my transitory inflation view, and maybe I'll show you guys a quick slide just to continue to hold my own in that respect. But I do feel that I am literally standing in a field and there's probably one or two other people next to me, and in the other field it's full of people who believe inflation is permanent. So right now I'm just going to say I think I'm almost alone with that view. However, the key thing about anything, and this is where it starts to really matter, right, is that stock markets don't care. Okay, when you think about the real economy, they don't care. Right now, they are just going up. It is a break up. It is a crash upwards. Okay, in American stock markets, we are seeing even more crazy valuations than we saw before when we thought it was expensive then. It doesn't matter. Trade what you see, and what we're seeing now is an upward movement in stocks. Don't be short, don't be shy. This could be an analog of 2007 and what happened to the stock markets there, where they rallied despite the real economy struggling and despite the credit market struggling and despite the cash flow issues that were going on. Underlying that, we all sat there. I remember that time very clearly as a trader. I sat there and I was scratching my head going, why the hell are equity markets rallying? There's no good news out there. They didn't care at the time. They just went up. So don't miss out on those opportunities like George Soros did back in 2007. If it's moving upwards, just play the trend game and be with it. And then really, for those of you that weren't there, I did the Super 7 review. So let's just go through a couple of things, guys. I just want to show you this. Look, here's a couple of PMIs for you, right? These are leading indicators of what's going on in the world. Look at this, turning down. That's China, Japan. Let's not talk about Europe because I've been there, but this is, I was talking about it before, but this is the ZEW index in Germany, turning down. Okay, so what are we seeing? This is where I have this view right now. Okay, unemployment, inflation expectations in the stock market, all the attitudes out there. Inflation is permanently higher. Unemployment is really, really low. No, it isn't. You need to look underneath the figures. Literally lift the cup, lift the lid on those figures. And the stock market expectations right now is as bullish and as positive as they possibly could be. Retail involvement is high. The market is rallying. Who cares about the real economy? Literally, who cares? I feel it's one of these Wile E. Coyote moments, right? We have literally run off the cliff. We do not know. Momentum is carrying us here, but we do not know that there's nothing underneath us and we're about to fall. For those of you that have that card, remember that cartoon? It was awesome. I used to love it as a kid. And here's my point about inflation, right? When you look at inflation down here, what we've got is the month-on-month, quarter-on-quarter figures. They're super low. Okay, I mean like super low. They're as low as they've ever been in the last 5 or 10 years. Okay, so why is inflation permanent? I see it as being transitory, right? Yeah, we had a flip based on supply chain and based on commodity price rises. Now, less so. And guys, a couple of things I wanted to talk to you about. I'm not going to get it too much into foreign exchange. There's a couple of things in here, and I don't want to steal Ainslie's thunder. But I will just comment very quickly on what happened around the Cushing issue. So Paul nailed it. There's a bit of a problem at Cushing. When you look at this chart, the percent of working capacity, in other words, the amount of oil that's being stored at Cushing, which, by the way, is an insane amount of oil they can store there, and they've been adding capacity over the years. But in percentage terms, it's about as low as it's ever been, and that's pretty important. Why is it important? Because it means right now the oil price at the very front end, right, literally oil for delivery today, this month, this time, is expensive compared to what it is in 3, 4, 5, 6 a year, 18 months time. So what's going on is the prices are high in order to encourage people to bring the oil out of where they've got it, be it in the ground, be it in a pipeline, anywhere, be it in a tanker on the sea. Let's bring it out and make sure it's delivered into the current market, because right now we've got a shortage. Some of this has been caused by some infrastructure issues around some of the pipelines. It doesn't matter what the cause is, but that's why you've got a big price, a big high price in oil in the December contract, up at $81. For those of you who just about see it, tiny font, I apologize. It's $81. But if you go out to November 22, which is this one at the bottom, we're sitting down here at 72 or 73, $72, right? $72, which actually, by the way, I think is cheap. But anyway, that's a discussion for another day. If I was going to take positions in oil, I wouldn't be buying so much in the front contract right now. I'd probably have some, but I would probably be thinking about stretching out down the curve, where if you go out even 18 months, you can get oil in the 60s. Now, that's got to be cheap, hasn't it, compared to where we are now? Interesting, isn't it? Okay. I'm not going to talk about the overall market. Ainslie will talk about that. I'm not going to talk about the gold market as well too, because Ainslie will cover that. I think there's something interesting going on there. I just want to talk very briefly about cryptos, right, and what's going on in the environment. I've added these. I'm now talking about the Super 7. Whenever I talk about what's going on in the world, I need to look at 7 markets. Ethereum for me, it's right at the bottom. It's like 6A. Rather than being like 7, because it's not really big enough yet, but let's call it heavily traded, and that's good enough for me. Where I think there's something going on is that I think in the past you may have seen inflation, you may have seen negative rates. That normally is a great bullish signal for gold. Where's all that speculation money gone? Maybe it's not in gold anymore. Maybe it's sitting there in the cryptocurrencies is the reason why they're doing very well, because that speculative money has moved into something else that's more easily tradable, probably with less margin. So there's a technical reason why you'd be in crypto rather than necessarily in gold. So gold maybe is a bit of a laggard, but who knows? We'll see how that develops. But here is Ethereum. Put some Bollinger Bands on it. Guys, it's sitting in the top Bollinger Bands, has for the last 30 days or so. Don't forget Ethereum has a 40-day cycle, so we may be getting close to a turning point again where it maybe consolidates for a while. But right now, it's looking about as bullish a case as you can possibly get, sitting within the top level of the Bollinger Bands, 20-day moving average, touched it once, another, a great buy signal, and then it's just kept on going and going and going. So you can't be bearish of this. Guy Paul, that's pretty much it for me. I hope that's a quick scoot around the world. And for anybody who wants a longer explanation, please just sign up for that session at the Trader Cafe and enjoy this presentation I've given in 5 minutes. That takes about 45.
Cheers, Julian. If they want to watch the Trader Cafe, they can catch it on YouTube, they can catch it on Facebook, they can catch it on Twitter. All recordings are available from there. Just going to ask you, Julian, if you're saying that the back end futures contracts look better value for oil, buying around $60, buying spot oil right now, today, there's some risk in that right now.
Yeah, there is. And you can see from the price action the last few days, right? For anybody, please, guys, you all have a WTI, and Ainslie will talk about this in a minute. The price action this week, even on Thursday, was pretty insane. I think it had like a $3.50 range, right? So this makes stops incredibly difficult. And this is the key point, right? So if you think about risk, always think about risk and what I'm trying to risk and what the reward is and all of those things, right? Yeah, great. If you're buying it at the bottom of a 3-day move, of a $3 move, then that's awesome. Right. But however, that $3 move, if you're trying to get a long position on somewhere in there, how much risk do you have to allow for? You got to allow for $2 to $3 of risk. Well, that means you simply can't take as big a position. Okay, so this is really simple, straightforward stuff. Or you might well say, to Paul's point, screw that, let's go and trade something that's not quite as volatile, as a bit more directional. Let's go trade Ethereum, because look at that, that's going up. And it's going up in a nice controlled fashion. There's no volatility there.
One of the really cool things about it is you can just jump on Fusion and buy, and not on the HW accounts, but on a Fusion personal account, you can just jump on that. You can trade Ethereum 7 days, 24 hours. You can trade Bitcoin 7 days, 24 hours. If you are into all this stuff, now we have access like we've never had before. And with ETFs coming on Bitcoin, there'll be even more access for those that want to get into it as well. Cheers, Julian. Thank you very much. Thank you for the last hour. You've been